Why, hello there, and welcome to another episode of the Innovantage podcast, where business meets tech to bring you your competitive edge. As always, I'm your host, Max, and it is my ongoing job and duty to explore that edge between business and tech and to find out how they two coalesce and connect between each other. Today's topic is going to be one about startups, about accelerators, about Lithuania, about the long route one would take to get to a point where they can help other startups be faster, be more efficient, and actually raise maybe their first money ever. To help me do that is Director of Plug and Play Lithuania, Povilas Žinys. Hello, Povilas. Welcome to the
Hello
show.
there. I'm very happy to be here. Thanks for the invite.
So tell me about yourself. So how did you come to be the director for Plug and Play in Lithuania? What steps in your career did you take? I know your story is very interesting.
Sure. So where do I start? I guess I always was leaning to the topic of innovation. So my dad was a businessman who started his own business, was an accounting business, and he always expected me to take over that. So I studied a lot of accounting. Let's say in my bachelor's, and I realized it's not for me, and changed the topic to management of innovation and technology in my master's. And after I graduated, I decided that I need to look for something most innovative that there is, and that was space technologies. So I took up a job in SES, which is a satellite operator. And obviously, at that time, to me, having Elon Musk coming, launching your rockets, your satellites to space was something unbelievable. But at the end of the day, it was a corporate running around $2 billion a year, and I was in the corporate team trying to figure out where the industry is going to go, which companies we should invest in, and provide recommendations to the board what they should do next. That kind of led to my next job, which was in cybersecurity. I didn't know anything about cybersecurity at that point in time. I was like, what is that? And my boss became the CEO of that company, and he decided to welcome me there as a product manager to revamp the product portfolio of that company. It was a lot of hardcore services like public key infrastructure, authentication, electronic signature, hashing, and all kinds of sort of cyber stuff. So I took up another degree in the Master of Cybersecurity and kind of implemented Agile essentially in the organization, launched a couple of products, and worked in positioning this company, let's say, as a thought leader in the space. So after a while, got a bit, to be honest, a bit boring in that sense that I was caught up in the acquisition of the company, and it was very about who basically will stay, who will go, and which products we will do, which products will be done by the bigger company. And it was a lot about talking what we're going to do, but we're not doing it. And I kind of thought with my colleague that it's time to think about something else. And we decided to launch a startup at that point. And it was a very basic problem because we had cards, like credit cards for the company, but we used to share them with a lot of the teams from Milan to Kiev at that time, where we had software development teams. It was basically everybody buying everything, and then at the end of the month you would get a lot of asks and questions from the team saying, okay, who bought what, and essentially, can you provide any documentation, invoices, or receipts, or whatnot? So we decided to solve that problem, essentially helping everybody buy the things they need for the company, and get approvals that they need, get the payments done, and get the documents needed by the finance team. And at the same time, it was about helping the companies spend their own money while getting something that was called interchange. So the business model was out of that. So MasterCard and Visa, all the networks provide incentives for the issuers of the cards. And we were to take a part of that. And so we launched the startup. It was very interesting. And at that point of time, I also decided to move from Luxembourg to Lithuania. Not really because of my startup, more because of my wife at that point, my future to be wife. But it kind of like was a new chapter in my life where I was not looking for a job. I had a job in me, sort of, that I wanted to do. And then I just looked how I'm going to do it. It didn't make any difference to me where I'm going to do it. It was more about where is my team, sort of where I can find the talent, maybe some support ecosystem. And that time, Lithuania looked really well. So I ended up in an accelerator myself, started Wise Guys at that point. And yeah, together with Kevin and Ondato in the same batch. And yeah, we were doing accelerator. We got some investment. Then I jumped to another accelerator, actually in Porsche. I got some more investments. So overall, I raised about €1 million and launched product. Got to a good situation where we had clients, got MRR, and we're going for the next stage. But unfortunately, at that point of time, we had bank infrastructure provider. So we wrote that embedded finance wave, which was very promising at that time, seeing that anybody and anywhere can embed financial services into their apps. But actually, we got a couple of providers that didn't turn out to be valid. They were not able to scale. Essentially, cards were not working. We lost a lot of clients. We tried to switch providers again, and that was also not successful. If one was good in compliance, another it was bad in tech, or vice versa. So we never got the right one in the end, and we ran out of cash to change the provider. So we just decided to sell off the product. And yeah, luckily, one of my investors was Plug and Play from the US team at that point. And they already had actually had one batch launched in Vilnius, and they were looking for a director to set up the Baltic office and help, let's say, do the program there. So I decided to take that up, and yeah, I didn't regret it. So it's now over a year that I'm in this job, and it gets me sort of a different angle. So I was in a corporate situation where I was trying to solve problems. Let's say I was in a startup situation, and now I see the investor's perspective, which for me, from the career point of view, it makes sense, and it's something that I really wanted to do. So yeah.
Interesting path. Interesting path. Thank you very much, Povilas. So, at the end of the day, you've worked in different countries, in very different environments, and you came to a situation where you're basically heading the accelerator here in Lithuania. But let's take a little bit of a step back and explain a bit for our viewers who don't know what an accelerator even is. What is their primarily job, and what is it that they do with startups?
Right. So accelerator has like a couple of components. Obviously, the idea is to get a founding team, and get them to the next stage and level.
Yeah.
There are a lot of specialized accelerator, but anyhow, it has components of mentorship, of workshops, certain knowledge that is shared, the community that is shared. Obviously, there's a co-working office space there, but I think the biggest key components is the network, and then is the investment. So a lot of effort is being done to help you get to the next level, in terms of getting the next round raised, or in terms of breaking into a new market, let's say. So this is what Plug and Play is focusing on. Obviously, all startups are different. So we have startups that are undergoing, let's say, clinical trials, for example, and they don't have yet the product to sell. We have startups who have thousands of clients already, and are raising, and are trying to get into US, let's say, as a market. And we have other startups, let's say, who are the first-time founders. They haven't started before, so they're learning how to build up a team. Let's say how to scale that from organizational perspective, and what's the best way, let's say, to make the least mistakes possible in this journey. So yeah.
Interesting. I like that kind of combination of actual practical things
Yeah.
and the community aspect of it. And I do believe that networking part is very, very important as well. I come from a much kind of more boring side of business where we're bootstrapped, we're a service company, where we're self-funded. We don't have that chase of a startup. We don't have that, from round to round, like X's that you get along the way, like X10 every time that you raise, basically. And business is always built on those kinds of relationships and networks. You never can predict which ones can be beneficial to you in the long run, which ones can help you even here right now, and which ones are, just nice to have and maybe don't even connect with the business at all. Maybe just meet some friends along the way. So it's nice that startups actually have that place, I believe. So from your perspective, looking at the Lithuanian market, basically Plug and Play haven't been doing anything that substantial before it came along, as far as I understand, right? So how have you looked at the ecosystem a bit on the higher level of viewing it, not from a startup level, but from one that actually gathers them up? What do you see? Any interesting, I don't know, observations that you can share?
Yeah. So Plug and Play is first VC out of Silicon Valley in the Baltics with an office here. Obviously, there has been visitations, but nobody has set up shop yet. We came, let's say, by the invitation of the previous Minister of Economy and Innovation, and it was a specific project that has been launched, and we see this is a tendency, let's say, in Eastern and Central Europe, that the government is more supporting innovation and startups. In Western Europe, we see more the corporates doing that, where our programs are sponsored by specific corporates, let's say, and they're looking for solutions to either bump up the revenue, save some costs, let's say, or basically invest for the future. And in the Baltics, in Lithuania specifically, I see that there's a lot of potential. The government sees that as well. We have a lot of growth, economic growth, actually, in the past 10 years that came from startups. We have success stories like Tesnet, like Vinted, like, for example. We have other companies who are considered startups setting up shop, from Robinhood to a Revolut to Flow. And they're basically here because they see the potential, they see the talent. And I think it's very, very good test bed in general for somebody to come and build a product and test it at a small scale. And this is what the Baltics essentially were good at. In terms of scaling it, in terms of getting it out of the Baltics, it's somewhat more challenging. And this is what Plug and Play sort of tries to implement and help the startup with, is go internationally as soon as possible. Because obviously, if you're building a unicorn here, you know that you cannot have a unicorn out of the sales that you do in the Baltics or Lithuania. So you have to go and think about global markets since day one. And most investors actually are very excited about this fact, because they know that these startups know that. So they know that these startups are going to build something global that is very scalable and is easy to invest in. Because if you're in a big market like Poland or in Turkey, we have a lot of investors coming to the Baltics from those countries, and they struggle to find those founders who think globally, because the markets are big enough there, and they can do good enough business without going global. And then a lot of the times they get stuck in that, and don't build that huge, let's say, company that they could build.
Yeah, that's true. That's true. I, as a foreigner living here in Lithuania, I'm always fascinated by the balance that the country manages to strike between like being relatively small, but at the same time, the level of development that has been put towards its infrastructure, towards its people, towards the companies that are coming out of this region, like you said, like Vinted, for example. Like it's a huge example of a successful startup. Many countries do not reach that, countries that are much, much larger than Lithuania. So it is definitely a testament to that. But what do you see are kind of the current maybe challenges that startups that enter accelerators face, newish startups?
Yeah. So we have all kinds of startups, from startups that have raised zero to the startups that have raised couple of millions, let's say. And startups also join, let's say, ecosystem from other countries. So we have startups such as Kibus coming from US, out of Silicon Valley, setting up a project here.
Mm.
Renewable, for example, coming from UK. We have Insto came from Korea to set up their EU operations. So there's like a trend, to use Lithuania as a sort of hub for the operations in Europe, in the EU, because it's much simpler to launch. Obviously, the costs are better, and there is that tech sort of talent, but also vibe and community to launch that operation. And obviously, as one of the big factors, saying that the government is quite approachable, let's say, and you can get some agility in terms of regulation in specific areas, especially in fintech. So a lot of interest in that. But obviously, the challenge remains the same for most of the startups, which is usually fundraising, which is going, selling abroad, go to market, obviously, finding right partnerships, building the right product, obviously, and scaling the team. So how can you find the right people to believe in you and work with you? Because building company together is kind of like a marriage. It's very you only decide yourself when you are kind of finished, because you start with zero. So even if you had the most, let's say, unsuccess if possible, if you have the biggest failure, you're still, the worst case is zero, so you can start over. So it really depends on the grit of the founder, and this is one of the main things that we're looking for in a founder. So how many failures can he sustain, or that they can sustain as a team? Because that's the biggest challenge. If you try long enough, you are going to succeed. This is just simple mathematics. But the question is, how long can you try? Can you try for 10 years, for example? Because we know a lot of startups that were not that successful in the beginning. So, for example, Kilo Health was not that successful in the beginning. It was very hard in the first 6 years until they found the way to sell, let's say, in the US. And then they shoot up, let's say, after. But if you're not doing well, then if you're not doing well for a long time, most people are unable to sustain that. And even for a few months, I know people who just quit. But those founders, we have, like, for example, Biomatter, one of the success stories, life sciences. So also quite some years of trying, let's say, living a really, let's say, a small life, working hard, not having that much, let's say, fun, having little expenses, saving costs at every step, and then having success after that time. So it's usually on average at least 9 months for the fundraising. So we just hear those stories that, oh, they just launched and then they got the money, but it's usually not the case. Usually it takes a lot of time, and that's what makes a difference. Those people who are able to stay and sustain, hope for the better future, not take that job in a corporate, for example, which is much easier to do with your holidays and your weekends. And if you're in a startup, there's no weekends or holidays or nothing. You just decide every day yourself your plan on what you're going to do, and it's very easy to sort of not have that work-life balance. And in a corporate, it's sort of like set, so because they don't pay you more for working more, so you're like, okay, why should you work more? But if it's and you're working for the future, if it's your startup, then you don't have that sort of break and limitation. So you're just investing in the future, and a lot of times at the expense of your family, your kids, and your other things. Let's say your hobbies, and it's tough. It's tough. So you have to be able to be strong.
Sounds like an anti-advertisement to become a startup founder, honestly. Like, expect nothing. You will not see your wife, you will not see your children, you will not reach anything in the first 9 months, definitely. So, yeah, try it. But you have went that route yourself. So now looking back, is that something that you're, I don't know, that you're happy about doing? Are you, I don't know, content with the results?
Absolutely. So, from the experience point of view, it's really an amazing, an amazing experience that you can do in your life, and I would recommend to everyone, to have it, because this is the most freedom that you can have, the most responsibility that you can have. Sort of the toughest conversations, you're the most probably excited, something that you do and is yours. It's kind of like your baby in a way, so it's really, really amazing. Regardless if it's successful from standpoint of did it make a lot of money or not. It's a very valuable experience that you can then use in your future career in life. And the people that you meet, obviously the connections sort of that you make, it's much stronger than in any job that you can have.
Okay, so now we have a little bit of a balanced view on whether or not you should become a startup founder. But coming back to your personal experiences with Plug and Play right now, how do you do the selection process, basically? Who do you look for in founders and companies and startups and ideas?
Essentially, you look for a good team. So you really want to know who are the best at what they do, and who have expertise, let's say, years from the industry that is relevant to the startups. So a lot of obviously qualities are around the personality, around the sort of grit that you have, the ability to hard work, the ability to be organized, independent, work in a team. And a lot of this comes from the previous experience. So that's what you usually look for. Not to say that you don't have good founders out of school, because sometimes you do. But then it's very hard to have that CV that proves that track a record that you can evaluate, right? So it's really an art finding those good teams. So you usually have interviews with them. Obviously, there's an application process, but essentially you look for a good team, and then you look for everything else. So the product itself, what's the tech? Is there IP? Is this scalable? Is this scalable internationally? What's the sort of global potential? What's the competition? Let's say, are there similar projects? How can it compete with those, and so forth? So there's like a lot of sort of components that are going into that. But I think the main one is really the team, because everything is sort of composable and solvable. But if you don't have a good team, then probably it's going to be very tough.
That is true. That is true. But at the same time, I'm guessing it's very hard to have a team at the earlier stages of a startup, right? And what you described is a very kind of lengthy, rigorous process. I'm guessing you personally don't know every single facet of every single industry out there, right? If somebody comes with you with an idea for, I don't know, new microphones that are revolutionary in some sense. Do you have to then become like an expert in microphones and the industry of microphones, or how does that work?
Oh, no, not at all. So one of the selling points for me to become director of Plug and Play is obviously what Plug and Play is, because when we compare Plug and Play with other funds, let's say that are in Lithuania, which are quite small, they have small teams and they don't have the luxury to call up their colleagues in Japan or in US. We have around 200 people who are basically in ventures team. They're scouting for startups in every single vertical there is, essentially. So I can always rely on my team, Plug and Play, to have that particular expertise and give their opinion around it, right? But then it's obviously how good the startup is. It's like it depends really in which situation, which market you're comparing it with. It could be good startup in Lithuania, it could be good regional play, let's say in Central Eastern Europe, but globally it could be a bad play. So we had still not quite a lot, but some of them in our portfolio in Lithuania that we we would not see, for example, potential going in South Asia, for example, or in Asia, or in MENA, but we see a good play in Europe, for example. So it really depends, let's say, what you're looking for. Here we're looking for obviously a strong team. We're looking for strong potential, but you also want to be able to help them as plug and play. So plug and play obviously has a strong network in B2B. We have a lot of corporations in the network, and we're trying to help them to sell and obviously to fundraise essentially in the markets that are relevant to them. So
how do you actually do that? By help, what do you mean? Like, do you go out and sell for them, or do you give them access to some resources, or how does
yeah, so it really depends. So we don't really like sell for them unless it's sort of an investor. So then we do sort of talk them up, let's say, with the investors that we know, and we do know quite a lot of investors investing around 250 startups every year.
that's a lot of startups.
Yeah. We have more than 2,000 startups already that we have invested as plug and play, and we accelerate around 2,500 every year. So there's really around 100,000 of startups in the database, which is like crazy, and the number is really like shocking. Like we have over 32 unicorns now. We just had 2 unicorns in this first quarter, which has been quite amazing. Essentially, we look for that in this.
I never would have expected so many. Like, you did mention that not only Lithuanian or not only Baltic startups apply for plug and play specifically here, and generally speaking, plug and play is a very international entity, basically. But those numbers are like staggering. There's so many startups. How many of those would you feel are like successful? I don't know how many survive their first like 3-year or maybe 5-year mark. I don't know what's the statistical cutoff point for when most do not survive.
Well, most of them don't survive. Let's say,
of course,
those are numbers. Like probably 90% of startups die in the first year, and then out of that who survive, 90% more die in the next 2 years. So quite a lot of startups, let's say, die. But at the same time, it really depends on what stage the startup's in. And in Lithuania, we obviously have a lot of pre-seed, seed stage startups.
Of course.
Then if you want to raise Series A or beyond that, it's really not that much possible in Lithuania. There's not really that many funds that can write up a check that is that large. So then you have to go abroad. But this is essentially what we want in any case, because we want them to have a hub in Lithuania, and we want them to be a global company. This is how they're going to become a unicorn.
Yeah, makes sense. Makes sense. Is there any particular kind of indicators that you see that the startup is doing well above the average, where they are, making strides, that they have that capability, maybe not to become a unicorn because it's very hard to predict, but maybe like, just above the average? What puts like a typical startup above the average?
It's a very hard question, to be honest. So we have a lot of startups. So we have AQ22, for example, AQ22, for example, who went to our US program. Then they did our fintech vertical program. Then they went to our New Jersey program. So they did quite hop around, make a lot of connections, and pivoted along the way. Is it a good business now from the financial point of view? No, but they have had great journey that I think is very impressive. And it really depends by which measure you go for. So if you look at my startup, for example, it's not the best case example from the financial standpoint, but I still consider it a success because I had the best time, basically, I could have had in that time. So I guess for other startups, it's the same, because you learn from those failures, and then obviously the success comes in one way or the other. Let's say even if you do take a corporate job, and if you start work in an innovation team in a corporate and implement something amazing, it's also a success. After you failed the startup, or you went to the government and then you helped to put regulation, for example, that is boosting the economy of the country. So that is also a huge success. So we only see those final successes and then we judge by it. But we have a lot of founders who did great financially, let's say, but then they fail like 10 startups, and each of them was a different story, and each of them they learned something, and from the financial point of view, it's a failure, but then it could have been a success from other points of view.
True. Speaking to that point a little bit, I believe that the public perception about a startup founder is like somebody very young, somebody inexperienced, somebody who's trying out their first things out there in the world. But I read a statistic basically that most successful startup founders are actually over the 40-year mark.
Yeah.
So what do you think about that? Does that ring true?
Absolutely. So most actually founders are a bit older in that sense. Is when they work somewhere and they see the problems of the industry that they try to solve themselves. So from SpotGo, that for example, the founders worked in the Girteka and they saw the situation there and they saw what they could implement better. And so it's about really seeing those problems, and I think it takes time to notice the problem. It's really rare that you're just out of school and see a problem that you can really solve and it's really applicable to the business. It's not that it hasn't happened before, but it's just statistically more viable that you have been there for longer and seen the world a bit longer, and then you tackle those problems that you really understand.
Yeah, that's an important thing that you should always highlight, right? Like that's just the nature of the business. You've mentioned it yourself, and I also talk about it. I feel like every episode I mention it at least once, that business is about failure more than it is about successes. Like you said, you will succeed eventually, but you need a certain amount of failures to get there. How many do you need? It depends. It depends on so many factors that it's impossible to predict, but you are going to fail. You aren't going to be a success like from day one. You are going to face challenges. You are going to be failing a lot along the way, and you need to do that in order to succeed. Otherwise, it will not work. So once you're 40 something, and if you failed like 100 times beforehand, it's not even like true failure. Like it's learning experience.
Yeah, it's very interesting. Like those definitions. We tend to think that if the company raised 20 mil, then it's a success.
Yeah.
But not necessarily. So if they raise that amount of money, that means somebody believed in them to actually return that money. So it's really a big obligation. So if you get 100K, it's much easier to return 100K, obviously, right? But if you get 20 mil, then obviously the expectations are different. So we have a lot of cases such as Kevin, for example, which were not, let's say, good cases in the industry. Now we have investment in Centro AI, for example, which is also amazing from one point of view, a lot of money and very young people. But the expectation from those young people that they're going to be able to grow that business to a level that's going to return that money is also huge. So a lot of them, raising that amount of money, let's say in the US, do fail. So it's really sort of like, in what scale you're looking at, because a lot of founders see it, from hundreds of thousands of euros, like raising 1.6, 1.5 mil, up to 2 million Lithuania is a huge success already.
Yeah.
But then it's just, only a first step if you are looking at building a unicorn. So, obviously the biggest success, I guess, is when you're able to grow organically. So you're just able to, finance your own growth, and then you're having this responsibility to yourself, right? So you're investing your own money and on that in that sense, and then it's quite successful in that sense that it's sustainable. So it's really on you what you want to do, and you don't have that obligation to return to the money to somebody who expects something from you.
Yeah. And when you say return, I want to kind of clarify a little bit. It's not the same way when you take a loan from a bank and you need to return
Yeah.
like a sum of money that you've taken.
Yeah.
You give something already in advance, like either equity or like future profits or whatever. Like
Yeah.
all deals are different, right? But this model is interesting in the fact that you take very little risk comparatively as a founder. Like you agree with somebody that the future is nice and you share the pie of the future pie that actually
Yeah.
may or may not come. So that's why a lot of founders do choose that. Like, why risk your own money when you can risk somebody else's money, right? That's
Well, in that way, it could be that it doesn't really make sense to risk your own money because first of all, you don't have that much money, right? If you are a millionaire, then yeah, of course, why not? But then if you're not, then it could be like it's just not possible for you to risk that amount of money that is needed to have a chance of this venture, and it is high risk and high return business. So ultimately it's a numbers game. So I always say that if you're not from investors point of view, if you're not invested in at least 30 companies, then you're just playing cards. You're just this, you're at the casino. You don't have the numbers, so you can't have a predictable return. Let's say with having 2, 1, 5, 10 investments, you have to have a portfolio of investments, and they have to be diversified. And this asset class is really usually a small amount of rich people's portfolio, like 2% or something like that. So while to them it's not a lot of money, but to you, if it's 100% of your money, then you're risking your family, your wife, your kids, and so forth. So it's good, obviously, if you don't have that yet, and you're let's say still in your 20s, let's say, and about yet to build a family. But if you have that, so probably usually too risky for you to do that. So I'm very happy that there are these funds, because then you have this opportunity to take that money and do something. And this is, the money that is meant for doing just that.
yeah.
So, and a lot of good opportunities, obviously, in Lithuania and the Baltics, because there's a lot of funding from the EU. There's a lot of grants as well, and I'd say it hasn't been a better time to launch a startup, because starting off is quite easy. I'd say raising that first 500K has never been easier than it is now. So afterwards, yes, when we have a product, when we try to with some clients, when you have some success and some failures, scaling it is very difficult. It's very challenging. But trying your business now, I'd say it's much easier than it was when I started with a startup like 5 years ago. You didn't have that many opportunities. I always remember, when Wise Guys were offering me a 50K to build a product, and I was spending $1 million per year to build my products as a product portfolio manager. I had a product in a cybersecurity company, and I was like, "What am I going to do with this? This is just like a team building whatever budget or something." So, but then somehow you do it, and somehow you get to the next step, and now I think it's much simpler in that sense. Obviously, now maybe there's more. There's more need for defensible technology. The sort of SaaS times where we could just do, software and make something a bit simpler. It's not that it's over, but it's much less likely to be invested in. And yeah, now I think with AI, it's much easier to build software in the first place. So, you don't need that many engineers. It's not that expensive anymore. So it's expected that somebody will copy you. So from that perspective, it's always about some defensibility. So either you have some partnership, either you have some good network that you can utilize in selling and taking that market first, or you have some technology actually that is defensible.
Yeah, I hear from like a lot of um, in the investor circles, basically from like fund managers or VCs or angel investors that I talked here and outside of the studio as well, a lot start their conversations basically by asking like, what's your unfair competitive advantage?
Yeah.
Like, what makes you basically defensible?
Yeah.
And the word unfair comes a lot.
Yeah.
So can maybe you explain a little bit about that? So what is that kind of unfair competitive advantage? Why does everybody
Yeah.
look for it?
It's a bit of a psychological pressure, right? So obviously the investors trying to get at the essence of that team and startup.
Yeah.
And getting that question a lot of the time myself as a founder, I mean, asking this question, I asked this question with more, let's say, respect, because again, it depends really on the scale. Your competitive advantage in Lithuania is not your competitive advantage in Europe or globally, for example. But I think that the question is, can you get to the next step in the fastest and sort of easiest way so that others don't take that space in wherever you are? So if you can get to that essentially, and you can explain that my next step is breaking to Poland, and there's no competition in Poland in the space, and we have already a partnership with XY, and we're able to launch our product in 1 month. That's your competitive advantage in the sense. So you can believe that there's nobody who can take that place in that a reasonable amount of time.
True.
So that's I think what the investor is looking for.
True. And for some, the mere fact that you are starting out in Lithuania, for example, is a competitive advantage against somebody starting out in Silicon Valley, for example. Yes, they have more instruments to raise, and they typically probably can raise more, just more piles of cash. But at the same time, they will spend them much easier and much faster. The rent in San Francisco is insane comparing to Vilnius. Like it's nothing.
The cost of people is insane essentially. So I was in Silicon Valley in our headquarters in Sunnyvale in the summer, and the rounds that people raised there are just completely not comparable, and the startups are not comparable. I mean, you just see those people from Stanfords and the Harvards and launching their second or third successful startup and raising tens of millions in a couple of months is just mind blowing when you think about it. And we're just trying to raise $500,000 or $1 million for a startup in Lithuania, for example. But at the same time, the competition there's just fierce, right? So if you're just starting out, most likely you will not make it there. You have to have a track record. You have to have people who trust you, who know you. You have to have really, really strong credentials for somebody to invest in you. Obviously, the amount of money is going to be larger, but nobody will bother with a $500K ticket at all in the US. They will be like, what are you going to do with that money? So
team building.
Yeah, exactly. So it really depends what you want to do. We had an interesting encounter in Estonia quite recently. So actually they take founders out of UK and they ship them to Tallinn to start their startups and raise pre-seed and seed. And when they're ready, they ship them back to UK for Series A, because then it's much easier to raise Series A in UK.
Okay.
So it really, every there's a right place for everything, right? So it depends on what you really want to do. And how fast and with what resources, and then you can understand that Lithuania is good for one thing or for some things, but is worse for other things. And that's what we're playing at as an ecosystem. We're good at starting out. There's a lot of support. There's a lot of investment in that. There's a lot of talent in that. But then obviously when you will need to scale, when you will need to build a global team, when you will need that global support, you will need that global investor, right? You will need that global talent. Then you will need to maybe hire from those big leagues from people who worked in Microsoft or Google or whatever, and that is going to be very expensive. But then you will have the cash hopefully to do that. So, yeah.
At the very least, you'll be one of the 1% or less than 1% that have survived until that point where you're thinking about those problems. Because until that point, you have so many problems that you need to solve, and they're always so kind of all-encompassing that, you don't even need to think about that. Like, you get to that point, it's a success in and of itself, I feel.
I think it's really a luxury to think about, the technology itself, and how to make this technology the best it can be. We have startups doing hydrogen, for example. We have startups doing an engine to a drone, a new engine to a drone. So it's like, how can you build those? How can you prototype fast enough? How can you prototype, cheap enough to make this technology the best it can be, so we can scale? So that's the sort of luxury that we have here. It's quite a lot of experimentations, quite a lot of failures. It doesn't cost you that much, but once you're done with that step, I think then it's different challenges, and probably also requires different people. So you're always, as a founder, have to choose. In Vinted, you also have founders who stepped out, in that sense, because at some point it's not a startup anymore. It's a different company, and there are different people who are needed in there.
True. And it's that sort of evolution that requires, I feel, that kind of experience of failure beforehand, because you have to make those kinds of hard decisions every day, basically, as a business, and you need to break things, and you need to assume new things on top of what you already have built, and you're always tweaking, you're always...
Yeah, absolutely. And we're talking about those qualities, I think, that the founder has to have, and I think it's courage as well. It's really something that, you have to have the guts to do something like that. And most people don't have that. When you talk to a lot of people, they're just like, they want to have a safe, steady life, and enjoy their hobbies, and that's it. And they don't want to have stress, and they're not bold enough to do that. So it takes a particular kind of person who is very ambitious, has the courage, has the grit, is able to build the team together, and has also the expertise in one or the other industry. So
yeah. And not to say that there's anything wrong with people just wanting to relax and do their hobbies.
Absolutely. There's nothing wrong with, having a chill life. There's nothing wrong with people who inherit cash and just chill, let's say, all their life. So, as long as you're not somehow destroying or interfering with others having a good life, I think it's...
If you have a lot of cash, just become an angel investor, like invest in 30 startups. You still have nothing to do, and one of them will become a unicorn and you'll be even more rich. So.
Yeah, well, you might as well have invested in NVIDIA or in Bitcoin or whatever. So it really is, to a certain level of success and luck, let's say, in a way.
Of course.
But you will not have the same journey that you could have. This is really about the journey, I think. Is one thing to invest. Then if you're a business angel, then you can also be part of that journey, which is also very interesting.
Yeah.
But if you just invest as a passive investor, you might not have that journey. If it's just for financial return, then it could be that other investments are more worthwhile. So
true. There's kind of this whole debate on risk assessment and diversification and what role startups play and which stage is the best step to invest, and how would you want to invest as an angel investor, or as a part of a fund or a syndicate or whatever. So there's a lot of ways you can approach it. I want to take it back a little bit to Lithuania and the current ecosystem as you see it. So from a venture point of like Plug and Play, which is an international organization, and you yourself personally have lived in many countries and have worked in many countries beforehand, what do you feel Lithuania is missing currently in its ecosystem for startups?
Oh, well, I think it's probably missing more international players. We miss the involvement of corporations, let's say, in the whole startup game. Let's say we have Vinted and Tezanet, who recently were startups, and so they kind of have that culture. So they somehow someone engaged, but most corporates at this point, and not only Lithuania and Eastern Europe, Central Europe, they kind of like just use startup ecosystem as a venue for marketing, that they're innovative, attracting talent, sort of, but they're not really doing pilots with the startups. They're not really investing in startups. They're not really like having a return in terms of cost savings or revenue impact in their organizations out of startups. And this is very important because then you have those startups work with those corporates and they can solve their problems and they can scale, those solutions internationally. So we are missing that link to make the ecosystem stronger. And I think Plug and Play is really strong in this game in other countries. So we have Mercedes, which is doing a lot of pilots every year, and their pilots every year, technologies every year that end up in the cars, and this is very far from what we have in Lithuania. So essentially, we are at best putting some startup on our website or doing some event to promote that startup, but we are far from actually implementing the solution and using the solution in the corporate and helping them to innovate and take the solution further ahead, let's say.
So is it like a cultural thing? Is the corporate culture that needs to change, or is it a legislative thing where we need some more proactive legislation, or where is the source of this?
I think the corporates didn't have experience before, let's say, working with startups. So that experience was, working with very young startups out of incubation programs or some sort of earliest acceleration programs, perhaps. And they didn't probably have enough time in that sense to have good return on their investment from startups. And that's why we don't have that in a way. But on the other hand, there's government who still hasn't, I think, invested enough in bringing startups and corporates together. So we have, let's say, in our Vienna office, where the government stepped in, they financed the first years of the aviation track that we have now in Vienna, and then the corporations who took it over and continued to do those valuable activities, because at the end of the day, it's the solutions for them, it's the investments for them, it's sort of also the strategic investments for them, which is probably even more important for a corporate than just from the investment point of view, the financial investment point of view. So yeah, I think a lot of those components are missing in that sense, and I think also we are looking for more organizations and more funds who could help startups in the Baltics to go out of the Baltics. So there's there's quite a close ecosystem here where everybody helps each other. But when it comes to getting out of the Baltics, there's really not much help that you can get, and this is sort of the niche that Plug and Play tries to fill in.
Well, yeah, as far as I'm aware, like there's a lot of intercultural mixing within Plug and Play, right? As far as I know, startups can go to Silicon Valley and pitch there if they like win some competitions, right? So can you maybe elaborate a little bit on that? Like what kind of role Plug and Play plays to bridge the gap internationally?
So from one hand, we send startups from the Baltics to other destinations, other programs. So it's very common, to start in Lithuania and then do a program in Munich, or do a program in Silicon Valley, or do a program in New Jersey or Texas or somewhere else. So those startups can see and compare themselves, let's say, with the founders in other locations or markets. And moreover, build a network, because that's very, very important, actually, to have, those mixed teams. It's much better to have a person in a team, from Canada and Lithuania than just Lithuania and Lithuania, because then you have a network which is much bigger and can be more impactful. But at the same time, we're bringing co-founders actually to do stuff in Lithuania. So I think that's very underutilized venue in startup ecosystem for the country, because a lot of startups, so we have startups from Germany like Red Arrow Technologies, who are coming from Germany to build and prototype their tech in Lithuania, for example. We have, that I mentioned, Renewable Kibus and Insto, for example, they're coming from other locations from Plug and Play portfolio to do stuff in Lithuania, either launch their product hub or operational hub, or let's say if it's a fintech, get a license. So do those different things and bring their knowledge and their network in there. So when we're able to have that global network, let's say when it's going to be very reachable, I know somebody who knows somebody in any place and who can help me, I think is going to be a much more global ecosystem. And I think Israel is a good example of that. It's
true.
It's a different level, of course, and they're at this level where they now are thinking, how can we keep those startups, which are not yet startups, they're huge companies already. How can we keep them more in Israel, because they grow, they explode, and then they kind of leave. But in Lithuania, we don't have that yet. Let's say we still have some success stories, but we don't have that, let's say, global impact.
That's interesting. And Lithuania is a part of the EU, which is a much larger body, generally speaking, and well, it comes with its own benefits and downsides as well.
Yeah.
So some of them you mentioned, there's a lot of EU funds to go around that we can leverage. But at the same time, if you have some success in Lithuania, then why stay in Lithuania, which is a comparatively small market, and your probably target markets are somewhere else.
Yeah.
Probably like at least in Western Europe, but probably like the US, the UK, and all of that jazz. And you probably want to be closer to that. So there is this kind of conflicts of interest.
Of course, there's conflicts. How much do you stay? How much do you go?
Yeah.
But at the end of the day, it's much better to build something bigger and have that smaller pie stay in Lithuania, which at the end of the day, if it's a smaller pie for unicorn, is making a huge impact, than have just everything stay in Lithuania, but that not build that big enough, let's say, company. So yeah, I think there's a lot of debate now, how we're working with that, how we're investing, how to make sure that they don't take these investments if it's government money, because most funds in Lithuania, they're financed actually by the National Bank of Lithuania, essentially. So in a way, they do want to keep everything here, but they do know that if they don't go there, they will not make the return here. So it's difficult, I think, to decide, and some will take more than they will bring, and some will bring more than they will take. But at the end of the day, you expect that the balance will be, to the benefit of the country. So
yeah, that's true. I agree with that. So yeah, like you aim high and you try for the best, but you keep a small piece of the pie here, or maybe even the big piece of the pie if you're able to do it. With nowadays, it's much easier to be more or less like remote from your market. It used to be that you couldn't work in a market without being present in that market. Nowadays, well, it's still preferable. You still get a lot of more insights when you're closer, but there are a lot of tools to help you along the way. You can be a platform built here that the US will use, and it will work just fine. But to kind of try and wrap up our discussion, I want to talk a little bit about the future. So what do you feel in the next kind of 5-ish, maybe 10 years? What are the top places for innovation? What kind of maybe industries or technologies that people need to look out for and build there specifically?
Do you mean in Lithuania?
Maybe in Lithuania, maybe globally. Like your perspective is both local and global. So
obviously globally, you have to mention AI in every single field.
I'm surprised we have avoided it basically this whole discussion.
I refrain from
weird.
that actually, because I do feel it's going to be across every sector, having quite a big impact. But in Lithuania, I think we have huge opportunities to do something in defense. So a lot of countries and players in the market see it as a good hub for innovation in defense, especially in drones and anti-drone technologies. Because we're just so close to Ukraine, to the war action, and we basically have good infrastructure that is being built. Honestly, we have infrastructure now, but we have huge investments that are coming. So there's going to be a lot of money to utilize that close connection, that sort of perception of the market that we're close enough, but we're still safe enough place to innovate for that kind of technology. So yeah, I think defense definitely going to be one of the key places to be in. Not only in Lithuania, but also in Europe, because we have been under investing for years in defense. And it's really shocking how rich we are and how sort of defenseless we are. So
We outsource that. We outsource that.
yeah, so that's a bit of a shame, but it's a big opportunity. And then I think it's life sciences as well, because there's huge opportunities in life sciences, and we do have very strong research in the field. We do have a lot of even the government has the goal of 5% of GDP coming out of life sciences by 2030, which is very ambitious. But even if it doesn't reach that, I think it's a very big venue for bringing our economy to the next level, to that advanced economy, essentially, instead of working with textiles and wood and all these kind of things, which anybody can do. But we have that opportunity and to use our expertise in life science, and there's a lot of interest in that. There's a lot of investment that probably will come in.
That's an interesting one. I haven't thought about that one, but it is true. Like the amount of research that is being done in the region, and generally speaking,
Yeah.
the amount of fund that goes towards education and the close ties again with the EU, with like top professors coming here to teach at local universities, and a lot of Lithuanians being very free to travel to study at Brussels and the UK and the US, even, like whatever. Right, there's a lot of freedom there and a lot of knowledge that comes back, and that is definitely
we do have first success stories like Vugene, and we have Biomatter, for example, and Thermo Fisher is here, which is one of the biggest taxpayers in the country, which came by acquisition of a sort of startup. So yeah, and also biotech cities being sort of built. It has a lot of sort of inertia to innovate in this field. So I hope there's going to be more, obviously, but other sectors, as always, fintech is going to stay. We had quite a lot of inputs over the years in that, so I hope that's going to stay. And we do have a lot of companies in our portfolio that are in this field as well. And hopefully then we'll see some good cybersecurity companies coming out, because we do have Tesonet, which is huge globally.
Yeah.
So yeah, I hope we will be able to use that as a momentum to, because we do have a lot of strong talent. We have very strong national cyber capabilities, let's say, that I think it's sort of a bit untapped potential to convert into business a bit more.
True. Well, we will, I guess, live and see in what kind of startups become the successful ones and which ones get invested more. And I do agree that the potential is definitely there, and there is a lot of potential to be had. But thank you, Povilas. Thank you for shedding a light a little bit into your life, into your career, and into the accelerator ecosystem and the startup ecosystem. So where can people find more of you, read more of you, hear more of you if they want to?
Right. Thanks for having me here. Essentially, can you reach me in LinkedIn? Quite easy to see me in every event of Plug and Play that is being held, and we have a lot of them. And I do sort of participate in every investors event. So next one is going to be a Life Science Baltics event. We're going to have a kickoff on the 18th of September, where we invite all the community to see who are the next lucky startups are in our batch. And obviously then there are the expos. And I think it's quite easy to reach me. I think just be specific on what you actually, the topic that you want to discuss, or send your pitch deck. Don't be ambiguous. Did you get a lot of those? So yeah.
I'm just like, hi, and that's it.
Yeah, could you help me with connect? I know it's like you do have to make an effort if possible. Come to Vilnius Tech Park. We have a big co-working space there. There's a lot of startups. You can talk to them, have a warm intro from somebody, because it's always better to make that human connection than just write somebody on email, and then it's you do get a lot of emails. So it's quite unlikely that you'll be answered quite fast.
Yeah, you're pretty good with emails, honestly. Like we email between our teams a lot, and that's pretty good, honestly. But yeah, thank you, Povilas, again. Thank you for sharing your insights, and thank you as well for joining us today for our episode. So if you liked what you've heard here today, leave us a like in the comments and in the button that's under the video. If you didn't like it, you can also leave a comment. Also press the like. I will not get confused, I promise. And yeah, subscribe to the YouTube channel and tell us what you want us to talk about next. And if you are a startup founder, if you want to go that journey, do try and do it. It's fun. It's interesting. You will fail a lot. You will hate it, but you will love it in the end. So see you next time. Bye-bye.